What is up, guys? Welcome back to another video. I'm really excited about this one because we're going to really hone in on something that can really truly elevate your trading and your skill set when it comes to reading price action, adding this to your trading strategy, and really elevate your success and your probability in your trade. So today we're going to be talking about changes in the state of delivery. Okay, when we have a bullish turning to a bearish trend or a bearish trend moving into a bullish trend and looking for some key reversal signatures. Okay, so the first step you're going to want to do is you're going to be looking at, you can use the 1 hour, the 4 hour, or the 15-minute. The 15-minute time frame is my favorite to look for specific PD rays or bearish fair value gaps. Okay, so here we have a 15-minute chart. You can see we have this 15-minute bearish fair value gap. So we're going to go from the 15 and we're going to drop down into the smaller time frames to analyze and study price more. So here we have a 1-minute chart. And as you can see, we're tapping into this 15-minute chart or bearish fair value gap here. And we can see short-term trend is bullish as we're driving up into this fair value gap. So in order to spot a change in the state of delivery from bullish to bearish, we want to see bullish fair value gaps and bullish PD rays being disrespected and being used as an inverse. So here we have this 1-minute bullish fair value gap. As you can see, we start to trade below here, close below, and then really start to aggressively close below another bullish fair value gap here to the left. Okay, so you can see that the state of delivery is changing from bullish to bearish short term here. This bullish fair value gap then becomes an inverse fair value gap. We have our change in the state of delivery here after we have two PD rays being disrespected. And this one turned into an inverse as well. And so you can either enter in off of these, either or you're pretty safe there with a respectable stop loss above the high that entered in the 15-minute fair value gap and targeting this short-term low and these 10 a.m. lows here for a nice move into the lunch hour. Okay, so let's get into some more examples here. Here we have another 15-minute chart. As you can see, we're tapping into a bullish 15-minute PD ray from the left here, and we're starting to reject here at 10 a.m. So we want to drop down to the lower time frames. So here we have a 5-minute time frame. Okay, so this bullish candle that is tapping into this 15-minute fair value gap to the left here is showing us that price is still in a bearish order flow because this bullish candle taps in and then we continue lower, right? So now we created this short-term swing high here. So if price is going to change from bearish to bullish, we want to see clear disrespect and clear momentum to the upside above the swing high to show confirmation that price is going to reverse. So this up close candle was the last up close candle to tap into a bearish PD ray. So this will confirm our change in the state of delivery. You can see here, the next couple candles continue to trade lower, but then we have at around 10:35 this aggressive move up, candle body closure above that swing high. This creates your change in the state of delivery. We also happen to leave a 5-minute fair value gap right here that gives us a nice confirmation that price is then rejecting off of this 15-minute fair value gap, bullish fair value gap. And then we're also starting to disrespect bearish order flow and create some bullish momentum in here. Now you can use the top of this candle's body that we used for this change in the state of delivery, because this bullish candle is now your mitigation block. Well, what is a mitigation block? Mitigation block is just like a breaker, but it has a failed swing low. So we failed to take the low here at 10 a.m., but we're still using this as our change in the state of delivery here. Okay, so your entry can be there, stops below this low that created the 5-minute fair value gap formation in these three candles. Taps in there, and then extremely drives higher for a nice 1 to 2 risk to reward here, using the 50% of that 5-minute fair value gap and the top of this candle body bullish mitigation block. Okay, let's get into another example. Here we have another 15-minute chart. As you can see, we have internal buy-side liquidity being swept, tapping into this 15-minute bearish fair value gap. Okay, so we want to go into the smaller time frame once we tap into this 15-minute and see if we can spot a change in the state of delivery from this bullish order flow that we've had all morning into a bearish opportunity. So here we are on the 1 minute, and this is that 15-minute transposed down to the 1. You can see we have this bullish fair value gap here created just around 2 o'clock. We have this last bullish candle that traded into that bullish fair value gap here. So if price is going to trade lower, we want to see this candle's wick low be closed below and this bullish fair value gap to be used as an inverse and bearish candles to close below this bullish fair value gap. So you can see we have just that. Tap back into it and aggressively close below this bullish fair value gap. This then becomes an inverse, and you can try to catch this as an entry with your stops above the highs. And we can target these internal lows here at the bottom here. You see these relatively equal lows to the left of the chart, just underneath price. Price then continues. We trade back up, tap just barely the bottom of that inversion fair value gap. We drive lower and drive up. Now, why does this wick reject there? Well, because this down close candle is a tiny bearish breaker. You see this up close candle, small high, bearish candle low, this wick's higher high, and then we aggressively trade below it. So this now becomes quote unquote resistance. Okay. You see we trade aggressively lower. We leave a small fair value gap here. The wicks and the bodies respect this gap. So this is your institutional order flow entry drill. And our target can be this internal sell side liquidity known as your low hanging fruit. Okay, so whether you get in up here off this breaker, more aggressive off this inverse, or this gap here for this institutional order flow entry drill, this is, so you have 3 opportunities here to catch this internal run on this liquidity for the short-term sell side, which this in itself can be considered your 2022 model that ICT teaches in his mentorship for free on YouTube. Okay, so with that being said, right now, if you're interested to learn more in-depth stuff like this, and more strategies, more things on changes in the state of delivery, market maker models, and which is my favorite, silver bullet, then click the link below. Come join us in the Discord, and you have a couple options. You can either get the monthly access to where we trade live during the silver bullet window in the AM, or I suggest you grab the master course right now because we're doing another 50% off this 20%. This is going to give you lifetime access to the Discord. It's going to give you access to my masterclass trading course that I'm constantly adding more and more lectures to So, and you're going to get 1 month of access to our boot camp, which we meet one extra day a week for 1 hour. And those lectures are also recorded. So you're going to get all 3 exclusive access for less than, I think it's going to be like $99 or something like that. But you're going to get this trading course and everything included with it that's already 20% off for another 50% off. So click the link below. The code is going to be in the description. Be sure to use that code at checkout. And until next time, guys, don't forget to hit that like, comment, and subscribe. Comment any questions you have below. And I hope you guys have an amazing day, night, evening, wherever you are in the world. Trade safe, and I'll talk to you guys later.